Hello and welcome to Forex.Academy, your #1 website for Forex and crypto education and analysis. In today's edition, we're going to be discussing the Bitcoin price dump. In this session, we will be looking at the recent Bitcoin US dollar price dump and what might have been the possible contributing factors. In this daily chart of Bitcoin to the US dollar, we can see a steady bull run as highlighted in section A, with a critical area of support at the 10K line, which lends itself nicely for a price action move up to the resistance line. This was breached in section B. This coincides with an all-time high of around 19.5K from 2017. Eventually, price reaches the $20,000 figure, and from there on over the Christmas period and into the new year, we see exponential growth where Bitcoin skyrockets to $42,000. With market analysts and investors talking up the value of Bitcoin from anywhere in the region of 30 to 40K and even 140K, it's hardly surprising that the euphoria crept in. Everybody was buying, especially with the CDFs market. This was a gold rush in all but name, and we have to ask ourselves one question. When assets are being talked up by investors or talked down, what are the real motives behind this? Are they simply looking for a market reaction in favor of their own investment, or perhaps this is a question for another day? Getting back to the issue, was the writing on the wall for the price collapse? Yes, it was for a number of reasons. Firstly, when a market is moving steadily as in it's trending, it is less likely to see extreme volatility unless there are fundamental reasons behind it. And because Bitcoin is essentially a speculative instrument, fundamentals can be set aside in favor of the trending market. The problem with this, as highlighted here, is that this is uncharted territory. We are looking at a $20,000 price increase in just a few days, which is almost unheard of. Technical analysis becomes difficult to gauge, and professional traders don't know where to get in or out of the trend or place stops. Many are forced into buying on fear of missing out, and this is extremely dangerous. Certainly the writing was on the wall when on the 4th of January we see a 6K price range move on this bearish daily candlestick. However, volatility continued with the bulls regaining control, taking Bitcoin to record highs of around $42,000. Professional traders will know from history that the correction was on the cards, and with the UK FCA warning retail traders about the potential of losing all their money trading Bitcoin assets, it is very likely contributed to the price action hitting a brick wall, and this may have contributed to the recent collapse. Bitcoin dumped about 12K in 24 hours. Many investors and retail traders were still buying well above $40,000, while the price was tanking, causing billions of dollars to be wiped off the price, and where billions were lost in the margin calls. Accounts were liquidated because of the massive move lower. Bitcoin should come with a health warning, buyer beware, and with more and more weekend traders getting involved in this market, which operates 7 days a week, and with so many part-time traders in their spare rooms having a punt, many are losing their cash deposits. It's not a surprise that the FCA have banned retail traders from trading cryptocurrencies in the UK from the 6th of January this year, and where the EU are now calling for tighter regulation in this space. Weekend Bitcoin traders will be licking their wounds, but let's not forget a lot of people are still in the money and sitting back waiting to see if price steadies itself. They want to see if it will continue to move higher or if it will continue to slide. Our advice on this would be to look back at trends on the lower timeframes. Here we have an example on a 1-hour chart. While looking for support and resistance lines and picked out trends, we are set by big money investors. By this we mean institutional traders, where they typically operate Monday to Friday. Be ultra cautious when going long during aggressive rallies and around huge candlesticks, especially the bearish ones as highlighted, which represents an overall move of $4,000. They spell out danger. Set a tight stop loss. If you enjoyed the video, then please like and subscribe and leave a comment down below about anything you would like us to discuss in future, or if you have any questions about this particular video. Have a great day.